The stock market is consistently declining between 2022 and 2023. For some people, it would have been a terrible mental burden, but for others, it has become a field of opportunity. What if today's market was like the one in the United States in the 1970s, when the bubble burst 50 years ago? How do you feel? What if Warren Buffett became known as the god of value investing at this point? Are you also able to do it? Isn't this a tale that can unquestionably present you with a chance? The bubbles in the stocks that were in the news at the time, including Coca-Cola, IBM, and Philip Morris, which had risen dramatically before that time, collapsed and were severely slashed by a fifth in the 1970s due to the increase in oil prices and interest rates. It is said that it took these failed businesses more than 15 years to recover. And value stocks experienced a heyday during that time. Buffett, who experienced a staggering loss of -43% in 1974, nonetheless, emerged at that point as the god of value investing. Buffett will name 1975 as the best year if you ask him. In fact, Buffett's annual rate of return was 100% at the time, signaling the heyday of value investing. According to several professionals, the environment for the period of the 1970s would come was built during this time. For approximately 20 years, I invested, and during that period, I consistently sensed that a crisis and an opportunity would present themselves. However, as these moments passed, I never knew if I was ready for the opportunity. After a few years passed, I'd always think, this must have been an opportunity. Think about how you feel about whether this is an opportunity or a failure as you view the video right now, everyone. So let's compare the present to the past 50 years and see how they compare. Let's investigate it using the Fred website. The CPI is represented by the red line on the graph you are viewing, and the Fed base rate is represented by the blue line. This graphic shows that the consumer price index is currently rising quickly, and that this rise is the highest one in the 40 years since the 1980s. Although it now appears to be declining once more, the Fed may have increased interest rates significantly for this reason. Let's contrast it with the stock market at that time this time. Now, unlike before, there was a green line. Compared to its high, the share price is currently down around 35%. When the recession hit in the 1970s, the Nasdaq plunged by about 50%, as can be seen if you take a quick look at it. This graph is an expanded graph that just includes the 1970s. This graphic shows that there has been a 35% decline in the past 2 years. The drop is not that significant compared to the 35% drop in the current year, but after that, you could see a drop of up to 50% in the next year. What is now known is that a true recession may not have yet arrived if we compare the charts of the past and the present. Given that an investigation indicates that we are currently in the early stages of a recession, some analysts may anticipate additional declines. However, the Nasdaq has been steadily increasing ever since. It has now reached the prior high and is continuing on a greater upward trend. By looking at historical charts, we can see that there may be an opportunity for us right now. In order to take advantage of this opportunity, we must continuously generate income through our labor. It's also crucial to collect little by little through installment payments rather than delaying purchases. It is evident that it does. A single past, present, or future cannot exist. However, we can infer that there are undoubtedly lessons to be learned from the past and that they are happening again. Let's consider the future course we must take and how we must react to it through this film, and let's imagine a second Warren Buffett and a second investment return. I hope you find this brief film to be helpful.